There's a battle for the merchant interface more than we've seen before, and we see that every day now.
Are we going to increasingly see organizations play more of a hub role at the heart of an ecosystem, enabling this incredibly diverse ecosystem to connect?
Yeah, that's a good question. We get that asked, I would say on a daily basis, but it's probably released on an hourly basis as to what is the one perfectly accurate definition of banking as a service. And I think I've probably given a different version of that every single time I've answered the question, depending on who the last person I spoke to. And then I was on a panel last week where we had a bank and a fintech and ourselves, and we all answered it in a different way, but we answered it in a similar way, right? And I always start with providing relevant, contextual, valuable financial services to retail and corporate customers in context. That's ultimately what banking as a service or embedded finance is. And we really focus on the consumption at the point of context, because the long-winded answer is, if you think of open banking, it was all about making banks' products and services consumable or accessible, right? It was just opening the front doors so a fintech could come and consume them real time. Embedded finance was, once they're consumable, embed them somewhere, embed them at a point of consumption. Contextual finance, in our definition, is actually the consumption of those services. So there's no use opening up your doors and plugging into something if it isn't valuable to you or no one's consuming it. And so we see it absolutely as a spectrum that we work with banks to create connections and APIs into platforms that are consumed by fintechs or distributors that drives volume and increased revenue for those customers.
And here we have what's going on in the world today. So what's going on in the markets? The S&P 500 has rallied the past couple of days. So why is that? This is Friday, the 18th of March. Why have they rallied? Well, right here, the Federal Reserve announced that they did a 25 basis point rate hike. That's 1/4%. 100 basis points is 1%. So what does that mean? This is the dynamic yield curve. When the Fed goes and raises rates, they're talking about this one right here. This is the 3-month Treasury. This is the rate on the 2-year, 5-year, 7-year, 10-year, 20-year, and 30-year. These are bills, notes, and bonds. And so they raised this rate. But I want to point out a couple of things. This is the S&P 500 index, and you see this giant bull market that it's been in since 2008. But you can take this and sweep it across and watch that rate change. Now watch the 2-year, especially this second one, compared to the 10-year, right there in the middle. Whenever that inverts and the 2-year is higher than the 10-year, we have had a market crash along with a recession. And then here it is again, the 2 and the 10 invert, and then a market crash, the global financial crisis of 2008, a pretty severe recession. Then Ben Bernanke pegs us at 0, and it goes along, and Yellen takes over, and Powell takes over. We raised rates a little because they finally were able to generate some inflation, and they wanted to sort of slow down the markets. Well, you can see that the markets sort of freaked out over that. There was on again, off again tapering and quantitative easing, and there was one period of quantitative tightening, and then we have this big old market rally, and then the peak, and then it's pulling back. But watch here where they change the rates and they go up 2.5 basis points. Don't just watch the 3-month, but watch the 2-year. The 2-year went up like a full point. The 3-month went up a 1/4 point, but the 2-year went up by about a point. And the point of all of this is that the 2-year and the 10-year are very close once again to a spread that it doesn't take much now for the 2-year to be above the 10-year, predicting a severe recession and market crash, and I believe with what I'm going to show you next, how skewed the economy is now, that this would be the greatest crash in history and a very, very severe recession, one that may turn into a depression, which we may or may not ever come out of. Who knows? Gold and silver should go into some astronomical figures, and at that point, other asset classes will become undervalued, and that's when you do want to sell a portion of your wealth insurance.
Today, the Federal Reserve finally delivered the most highly anticipated and probably the most absolutely meaningless 25 basis point rate hike in its history. Now, at one point, there were some people who thought that maybe Powell...
Out of everything I share today, and I'm saying this because Peter Schiff's on, listen to what Peter Schiff is saying right now. So listen to what he says about the rate hike and listen to what he's saying. I know I've shared a lot of clips here in the beginning. There's a reason why. I shared the fin stuff because I know we have a lot of people in the audience who really appreciate it. And why am I showing you me today? I don't know. I feel good today because I got some sleep. So sometimes it's good for you guys to see me personally. But I'm going to cut myself out of here now. So enjoy this. Enjoy Peter. And we'll get to the video right after this. We're going to be doing XRP, XLM, Bitcoin, and which other one? Oh, I wanted to touch on Algo, IOTA, especially, and XDC. So that's what we're going to be doing today. So stick around. Make sure to hit that like button. If for any other reason, because you got to see me. Stay blessed, everybody. Let's get back to this.
Lift off with a 50 basis point hike, but Powell pretty much threw cold water on that during his semi-annual congressional testimony, where he came out and said that he was prepared to raise rates by 50 basis points. Now, the decision to raise by just 25 wasn't unanimous. There was one lone holdout, Bullard, who wanted to go the full 50 basis points. But even 50 basis points would be too little too late to do anything to derail this juggernaut of inflation that has already been unleashed. And I think the reason that Powell even was able to move by 25 basis points is because the markets had pretty much given him the green light for that increase. In fact, the markets started a pretty big rally on Monday and rallied even more today. The Dow finished the day up by better than 500 points. You know, since the Fed's been talking about this rate hike for so long, the markets have had a long time to discount that rate hike into the stock market. Now, I don't think the market has discounted nearly enough the number of rate hikes that we're ultimately going to have and the impact that those hikes are going to have on both corporate earnings and the U.S. economy. But whatever the market assumes is going to be the result of rate hikes, that has been factored in somewhat into the market. And again, there is an old stock market saying, you buy on the rumor and you sell on the fact. So to the extent that there's been a lot of selling on the rumor of a rate hike, sometimes you would expect a rally on the actual hike.
Isn't that exactly what I said? Normally it's buy the rumor, sell the news. But for this one occasion, it was going to be sell the rumor, buy the news, because so many people thought that there was going to be such a high rate hike and they were going to undervalue the 7 rate hikes and only put stock into the 0.25% raise of the 25 basis points. Exactly what Peter Schiff said at the end is exactly why I thought we were going to have a rally coming out of it, which is exactly what's happened. But now you're going to get the catch up because a lot of people were buying before, and now you're going to get the people that are selling this top right now because they want to take their profit. And if for any other reason you don't want to listen to me or Peter or anybody else, Mike, or anybody else that I trust, listen to my train that I found at CVS yesterday. If not for the conductor train, and this is a nice one, if not because of me, it's because of the train that's telling us the truth. So I'm going to get out of here because I'm always very distracting when I see myself. That's why I don't show myself. It's not because I'm bald. It's not because of any other reason. It's just I distract myself, and that means I'm going to distract you because I tend to be a very funny person when I'm on camera. So we need to focus on the charts. So let's get back to the intro. Good late morning, 10:49 a.m. Eastern Standard Time on the East Coast in the United States of America. I'm XRP Future Millionaire, and I reside in the great, rainy, slightly colder, very dark and gloomy state of Michigan, of my very best weather. So, see what happens when I get some rest. I step away for a while so that I can recharge the old batteries. So, hopefully you like that intro. Hopefully, for some of you who have never seen me, eat your heart out. So we've got Bitcoin. We're going to go through this real quick because I want you guys to see this. But I'm going to take off the Ikomoku so you guys can see exactly what I'm talking about right now. So we don't have to look at anything on the screen that might obscure what we're looking at. FYI, TradingView is running a little slow. There must be a lot of people on here today. So basically what we're talking about here is we've got a very, very big symmetrical triangle that I think at some point we're going to fill out to 50,000. My whole argument has been, since we are not doing a buy the rumor, sell the news, and it was a sell the rumor, buy the news, because I didn't think we were going to do a 50 basis point rate hike, as I was proven right when they did a 25. So I thought we'd have an immediate push up after, which we've had. But I thought it was going to be to trap people. Not to say you couldn't buy them, because I gave great targets for REN, especially when I was focusing on it, that you could have got in anywhere under 33 cents, like I said, and it was for a 13% move. Now is when I would have sold out. Not because I don't think we're going to move higher, but because I think we're going to cap the upside, and whether or not we can get all the way up to here or not, I don't know. That's, what is that right now? 42,500 area? I don't know. But what I do know is I think we're going to come back down. In my opinion, this is just my opinion, guys. I could be completely wrong. So we've made this. I think we're going to come back down and touch this before we move up for the ultimate move. So all I was saying was, if you get in on this, at least be secure in what you're buying to hold it on this dump. Because it's likely going to happen, and all it's going to do is be a retest, and it's going to be kind of like a back test of this symmetrical that we're in, and you can see exactly how it plays out. The smaller symmetrical, it's like Inception, guys. So we got this symmetrical. We broke out with a W reversal. Now the logical thing is, I said we could bounce off of here and come up and touch here, but the logical thing now is to retouch this downtrending resistance on the symmetrical and prove the breakout. And I targeted it at about 39,200 or 38,800. It could be all the way down to 38,500. There's a chance we could come down here and hit it at 37,400. I just don't think it's going to be way out here when we hit. That's why I'm targeting this area. But once we hit this, I think it's going up to 50,000 with a little bit of ups and downs in between, but I think we could go up to 50K. I just didn't know if we could get over 41,800 or 42,500 and hold the top side. And I said, even if we got up here and held here, I wasn't worried about the 2,000 point rise here. I could just buy it here and take the bigger gain on the big move. And that's exactly what I'm talking about still. Although, if I wouldn't have took my break, I wanted to buy REN, but I was so wiped out. I stayed up until 5 a.m. 2 nights ago with my son. He had stitches. He's only 2. So, you know, sometimes, well, he's small. So I stayed up with him and I was wiped. So I gave out great advice. I know a few people that got into it. CFX got into right when I told him to get into, and he's doing fantastic on REN. There's a few other people that got in REN. Some people got in Algo. Some people got in XRP. Some people even got in, and I think it was a bold move, but it was a great move. Some people got into OMG, and that went up like 13%. So that was another great move. But what I'm telling people is take your profits, because unless we break this line right here, which is 42,500, and you can never get the top, unless we bust out and you see the resistance or support and it busts back to here like 42.3, and it's on top of this descending blue line, and that's the smaller symmetrical, and we can break out of that and then get into the much larger symmetrical that would put us at 50,000, guys, on a breakout. But I still think we have to back test that, you know, in the smaller symmetrical and back test the breakout. That's all. That's it. There's several different areas. We got the very small symmetrical that broke out from February, and you can see it. Then we've got a bigger symmetrical that we're in that is for the last few months, and we could come out and bounce up here. And then we got the much larger that comes way out. And that's how we get to 50, but we don't know which one we're going to break out over. And I thought we could break out of this one and back test it. I didn't know if we could get all the way up here, and that's the whole thing. So it's either a back test up here, and this becomes a sweet spot on the X, or it's going to be down here, somewhere around here in this area. I'm targeting right here, about 39,000, 38,800, somewhere in this area. And that's where we would back test. So if we're saying it's in this area, it would probably be, what's the exact number? Around the 38,500, I'm willing to say. Somewhere around that area, I think, is going to be the back test. Now, if we get over the 42,400 and back test that area where the X is, and then we hold 41,705 as support, well, then obviously you buy there because that's where it's showing your new level of support. But until we get up there and prove that, I'm anticipating a breakdown based on volume, and you can look at it in the 4-hour time frame. Rising price, right? We rose in price. We crashed in volume. So unless we get a volume spike, this is going to indicate we're going to do this before continuing on. And that's all I'm saying. So now that you understand, we can go to XDC, because further thinking, I've already done XRP, already done XLM, already done DGB. I just want to do XDC, and then I'm out of here with Algo and maybe Theta. And it's the same thing with all of these, guys. Every single one of these can show you the exact same picture if you draw it out. So let's get into the daily time frame. You've got a very stable support that you could say, hey, besides a wick down, we're holding this area. But we've got a very big downtrend here too that we've been on for some time, but that doesn't mean it's going to continue forever. Eventually, you're going to start breaking out of this. And the fact is, right now, we're in a desirable spot if it comes down and retests this area. Who knows how far it's going to retest, because I'm going to show you something else. Because that's what you've got in a much bigger scale. Wow. I was going to say, where the hell's all the rest of my stuff? But there's the rest of the stuff. But I'm deleting all this. That's too much. So let's just do this. I wish I would have done that before I did this. Wow, this has already been 17 minutes. Yeah, I'm going to come back after and do the other stuff later. I'm ending with XDC. This has been a straight to the point update, and I'm not putting anything else in it. If you don't like that, too bad. And I like to come back through, so it doesn't actually, in the beginning, it doesn't hit the wick. I want to see a full body. So that's what we're looking at. So I think there's still a lot of meat left on the bone is the whole point. There's a lot of meat on this bone. A lot. Now, when you come up, it retested it. But now let's see the volume profile here. Let's get the volume back on. Because not all of them are going to be the same. Some of them are going to be ahead. Some of them are going to be behind. XDC2, though, is showing very weak. It's very weak right now. There's not a lot of volume in the 4-hourly. Let's bring on the stochastic. I hate the stochastic. God. Let's get the stochastic off. But it's in overbought right now in the stochastic. So, all the indicators, I can put the RSI on, too, since I have the stupid stochastic on. So you guys can see how they play off each other. So the stochastic is an overbought. The RSI is heading into overbought. So on XDC, it's signaling that we need to come down some eventually here. It's not saying it's done yet. I would dare say it's saying it could come up to 556 still. But I would say overall, we're coming down. Everything in the whole market's going to come down. And it's going to try to knock people out. I would say a logical retrace would be around the 4. It's not going to... If you're on this, it's not coming all the way down to 4.8. So if you're waiting for it to hit the symmetrical support, I don't think it's going to. I think the best you can hope for is about 4.9 8 maybe somewhere in here. But don't get yourself out of a position here or wait too long on XDC, because I'm not convinced that it's going to come all the way down to the symmetrical. I could see a small retrace when the market drops, and that's about, that's 8.8%. So yeah, that's what I'm seeing. Holy shit, how high is the stochastic? Holy crap, it's at 100. Yeah, we're definitely... I might keep the stochastic on because a lot of people like the stochastic. I accidentally put it on, but hey. That's way up there. 100's way up there on the stochastic. That's the 14, 1, and 3. So that's way up there. And with the RSI being so high and the volume being so low, I mean, this is all pointing towards about an 8.8% drop on XDC when this tops out here in the very short term. And if you don't believe me, look no further than the downtrend, ladies and gentlemen. We can even start right here at the drop. I mean, that's your breakout. That's what we mean. If you're going like this, that's where we had our breakout. You can even come back a little bit and do it like this, but you can still see the same breakout that occurred. So wouldn't it be logical to backtest where the breakout was? Because we could do it like that even. We could come inside a little bit more. It just all depends. But the point is there's a breakout that happened here on XDC. And we're going to backtest that breakout. And this is exactly, I think that area is perfect. So, XRP Future Millionaire, hit that like button. This is why I'm the best in the business. And this is also why you should join Tom's Army for $9.99 a month. So you can get in the Telegram with better than 260 like-minded people. Stay blessed.